I just was working on one time frame, for example, H4 or H1, not making it as a correlation.
So you asking
I-
me when I back test, do I use all the time frames? That's what you're saying.
Yeah, not all the time frames, but for example, H4 combining M30 or M15, but not going too deep. For example, like 10 minutes or 5 minutes.
Yeah. So when I back test, bro, I look at all the time frames. So for example, let's say I'm gonna show you exactly what I do. So the way I do this is when I go to the market, I find a setup. I find a setup that happened right in the past. So if I see like a clean push like this, right? I'm on a 4 hour. I see a clean push like this, boom, clean push down, clean push up, right? I just go to find these setups, and I just go and use the replay tool, and I'll do just like this. All right, cool. This was a nice bullish push. Let me go and see what this was about. And then I go from the top, just look at it. Okay, cool. Daily, it's just a straight bullish candle, just pushing up. Overall, we already know, gold is super bullish. It did break this higher low point, but it's pushing up, right? Okay, cool. So I just go and just trickle on down. 4 hour time frame, 8 hour time frame. And now if I'm looking at this and I see it on the 4 hour, all right. So the biggest things I would point out here is, structure. Just look left to right. So whatever that was happening before I got to here, I'm just marking it off, because this is how you would look, if you were in this market today. If this was today, you would have all this marked off. So I would just backtrack what happened before, and then I would go boom, mark off all of my structure areas, and just spot the shifts. I just spot structure. I mark up structure from left to right, right? And then I'm finding the shift. Everything that we do when we looking at the market, it's always, we always trade retracements, right? We wait for the retracement. Let me add him in. When we looking to attack the market, we waiting for retracements. So once I find that shift in the market, I'm trying to figure out, this was all bearish, right? At one point,
Yo,
yo, I'm going over. Pretty much he asked me how I back test, so I'm going over that for him. You probably already know this from the course, but in case if you don't, some of the stuff you might pick up on. But I think I made a video on it, if I'm not mistaken. Right? Did I make a video on that? You remember?
well, what you doing again?
Do you remember if I made a video on how I back test? I think I might have made a
Yeah,
video on
pretty
the
much
course.
the breakdowns, right? I'll say.
Yeah, but okay. This is for.
Yeah, there was like but one video though, or
Oh,
two. I don't remember. Yeah.
okay. Well, shit. I'm recording this, so
Uh,
he asked me, bro, what do I do? How do I back test, right? How do I back test the market? So I erase all this and just do it right over for everybody. So when I go to the market, like I was telling him earlier, I always look for some type of shift, some type of push that happened within the market. So this is a naked chart, right? Nothing on it. And all I do is I go to like the 4 hour time frame, and I just try to find a push that happened. So the most recent push that happened on, well, not even recent, it doesn't have to be recent, anyone. So I just look at this. So for example, if I look at the market, I can see here it was a nice bullish push up, nice bullish push down, nice bullish push up right here, nice bearish push. I just find some type of structure area, and I literally just find a random one, and I go to it and I say, all right, I'm gonna mark up this bullish push that happened right here. Take the replay tool, mark it off. All right, and then I'm just gonna go ahead and I'm gonna dig into the structure. And then from the 4 hour time frame, I'm just going down. I'm looking at what happened to the left, just so I'm on track with the whole shift and momentum that happened, and just so I'm up to date on the current market conditions. So you can see, obviously, we went on a bearish push, lots of lower high points, and then obviously we had a shift. So all I'm doing is just marking off previous structure, and I'm looking at this, trying to find what happened that made this bullish push, present in the market. So you can see here we got higher low point, mini higher low point. This is like the first mini higher low point within this bearish push. I already know that this is a sign of potential shift or either some type of slowdown in momentum. When we get higher low points happening in a bearish market, it's a shift or a possible slowing down, because obviously this is not the proper movement. We want to see lower lows and lower highs. So anytime you see higher low points in a bearish market, it lets you know it's a potential momentum shift or a possible, just straight like that, a momentum shift. So it doesn't have to always break and go bullish, but it could be a temporary counter trend and then we go back bearish or whatever. But for this situation, price broke structure, right? Boom. This is the first break of structure that happened. So from there, I got all the clues I need to see. So I'm treating this as if this was today, right now. Now from here, just going down to the 1 hour and then just looking at what happened. Obviously, as we get down to the 1 hour time frame, now structure becomes a bit more clear. And this thing was clean. You can see, look, nice level of support that started to build up. So these are all clues of the potential shift, right? All these clues. This is what led up to it. Higher low point, area of support, and we got to break a structure. Mark my structure point off, yellow circles or whatever color you want to make it. This is signifying a new high. So from there, now I'm just looking for what? One of y'all. What am I looking at from here, Gabriel?
Higher low.
Right. Boom. Easy. Higher low point. So once we get that higher low point, all I'm going to do, pull out my fib and just gauge it, see where we're at, what kind of retracement we got. All right, cool. So now we can see a clear shift. Super, super clean. We got a higher low point. We got a fib on here. And now we want to see what we got. What this looks like, 23.6 setup. Off rip, we know 23.6. We get down to the 15 minute and 5. Same principles every time. And then look at this. Now once we get here, we looking at the retracement. So we want to mark off our structure. Marking out the counter trend, right? You can see that we had a nice little counter trend that was going on. Nice little lower high points. And then we got this shift in momentum that happened here. We're waiting for some type of break of structure. Like I always say, a break of structure. Boom. That was the break, right? This is a lower high point, area of resistance. It broke it. So I mark off everything. I mark off all the structure. You can see here is a mini higher low, right? All of this stuff is relevant. So as detailed as possible. So that way when you analyzing this stuff, it's clear. Like you can look at this and see the movement, everything that's going on. From here to now, higher low, boom, break of structure. New high. Now we wait for some type of higher low point, retest, or support area that was built. And that's what happened here. And boom. So this would have been your area of interest. Get down to here. Draw your level of support. And at this point, it's time to play ball. So we got everything we need to see. Clean shift, 23.6 setup, level of support, seller's exhaustion, rejecting the candles, all of the signs that you want to see. Beautiful entry. Boom. Bullish engulfing. That's all you would have needed for this one. Or you could see it as a bullish variation, whichever one you want to say. Entry. Stop loss below it. Let's say 70 pips. TP to the fib target. Also, obviously, TP1 is always the negative 27%, right? So this risk to reward wasn't great, right? It didn't end up being great for this. But another thing that I do as well, if I would have, I don't know if I took this trade. I don't remember. It was in November. I probably did, probably didn't. But at the end of the day, if I did take this trade, my TP is always at the negative 27% on the fib. But I also play the odds of structure as well. So sometimes I'm using this as a TP, and then my next TP would be to the left. I always look left to right. So if I see any type of area like this where we have a level, if this was a previous zone, I'm going to bring this all the way across, and I'm going to look at this and I'm going to say, hey, all right, I had a level. This is my TP, right? It's a 23.6 setup. We already know the characteristics of a 23.6 retracement is a continuation. It's a continuation move. So it's a possibility that the market could continue on this continuation because that's just the type of setup it is. So if that happens, I'm willing to hold a trade at times. I'll close out, some profit here or majority, and then I might leave some runners. So if you have runners, this is how you took advantage of it. You can leave a runner and you can wait until you reach another level that's relevant, which would be this level. This would be the first level that would make a lot of sense to potentially close your trade at and use as a target. So you could have put in your runners to here and closed out at 26.12, 850 or 860, whatever. Boom, that's 176 pips. You feel me? Nice 1 and 2 risk reward. So this is usually how I attack, these type of setups, and how I decipher where I'm gonna place my TP, my final TPs. So I mean, this was super clean. It made hella sense, obviously, and you can see this level right here, this zone, and it did reject it, but then it continued to push up. We never know what's gonna happen, but you just want to be prepared for those things, so that way when it does pop up, you're not caught off guard. You feel me? Does that make sense? I feel like this was super clean. This is a perfect example, actually. But tell me what you think about that.
Yeah, that was super clean, bro.
Got it.
And actually, in that example, bro, I remember in one of your videos, you said that every time that you're looking for that shift in momentum, and you don't really see like that type of break and retest, you always wait for like at least two bounces. You know what I'm
Perfect.
saying?
Exactly, bro.
So I mean,
Exactly.
in that example right there, I think it can be like a good example, right?
This is perfect. I gotta upload this to the course now. This shit beautiful. It's funny how I just randomly picked a movement and it gave a beautiful setup and everything perfectly. But yeah, no, this was literally like textbook, bro. Like,
Yeah. No cap, bro. I mean, I ain't gonna lie, bro. I've been working on that, bro, because I was like stuck, bro, on just looking for that break and retest, and that's not gonna happen, like all the
all the
time.
time.
Yeah.
Yeah, bro. That's a big thing. To be real, in the beginning, this took me time to understand. To be completely honest with y'all, like I had this down pat. I knew break and retest like a motherfucker. That's all I knew. Like if it did break and retest, just best believe I caught that setup. But when it did stuff like this took me time to understand and to trust it. But that just took time of more chart time I had, more exposure, taking setup, missing out on setups, and I'm wondering why I'm missing them. And then obviously, like I have connections with other traders that trade like us, that's further along than me. So I've learned that from them. And then when I learned this, bro, I was like, wow. So this is the reason why I miss out on so many trades, because I always will be waiting for the market to come back to this original, level right here. And I will always catch that trade when it came here. But yeah, bro, you never know, you know. But or wait till the market to come back to this, and either way it didn't come back to it. But yeah, so that's a perfect example. This is literally how I attack 23.6 setups from the point A to point B of everything. And just a little sauce as far as looking at the previous structure from left to right. You can always use this. So let's say, for example, let's say the market does a setup like this, right? Let's say it does this. You see here we were bearish, lower high points, lower high, ranging in here, and then boom, it broke out. And let's just say it came back down to this level and retested this black line, right? Huge retest on this level of resistance. If it came back here, I would have taken a trade here. I would have bought in here and bought it up. And let's just say you didn't use fibs. You can still attack this, right? You can still attack this. The same way I did this, the same way you would be using your target. You can use this as a level, as a target. So this is why zones are important. I don't just come to the market and just draw zones everywhere, though, because sometimes that'll cloud your vision. So I only draw a zone whenever this is like previous work, and I'll leave it here. I'm not gonna bring it all the way across, and I'm just for no reason. But in certain situations, if you don't use fibs, because I want also people to understand this, like we don't have to use fibs. It's useful, it's super powerful, and it's aligned with the way we trade. But let's just say if you don't use fib and you get a setup like this, where it just comes back to this line and retests this beautifully, you don't need a fib for this. Like you could use a fib, but technically you really don't. If you didn't use a fib for this, you can see this clear and you would know this is a break and retest and this is a major level. You gotta buy in here once you get that engulfing on the 30-minute. Take that entry, boom. You buy here, stop loss below it like we usually do, and then you say, all right, cool, where am I placing my TP? I would look up and look to the left, and I would say, okay, boom, this level here, we can use this as a target. So it's just showing you, like, it's either way you want to go about it. You can use previous structure, and it could be powerful. All right. So that's that setup. That's the first one. Let me put that back, actually. Shit, I'm trying to use the undo. Yep. All right. So that's the first setup. So from there, Same thing. I just continue to keep going and flowing along with structure, bro. Same as that thing. Put that fib right back. We already know that was a 23.6, so we're going to keep dragging it out. And we're going to find the next opportunity. The next opportunity was here. And we treat everything, we entertain everything. We're going to mark up this, look at this, and we're going to say, all right, this is a 23.6. You can already kind of see that it didn't really give us anything right up in here, right? Because the market just went straight up. So it made a new high and came back down and retested this level. So this is a different type of setup. I don't think I went over this in the course, but this some sauce as well. So sometimes, okay, all right. So yeah, like I was saying, this is some other sauce right here. So sometimes setups like this happen, and we don't always get this break and retest and all this stuff that we were waiting for here, right? Like obviously you can see this doesn't look like this. This is like when we get spoiled with beautiful movement like this, where you can see the counter trend and see clean structure shifting and breaking and retesting and all that good stuff. But it doesn't happen all the time. So this is where it comes into what being patient and being selective, because I'm very selective when it comes to where I trade now. Because when you look at my screenshots, it's always the same type of stuff, right? It looks the same. But stuff like this makes sense as well. This is a huge level right here. If we look at this, I can kind of, make this zone here, like here. You can see like this is a relevant level, right? So sometimes when we get setups like this, I also may take a buy where we had 1 rejection, 2 rejection, 3 rejections, and it's a 23.6. So you pair all of those things together. This could be aggressive. I'm not going to sit here and say that this is such a high probability, but sometimes I do take entries off of zones like this where we just retesting and like it's a continuation. But you just got to have a feel for it. Like sometimes it's a confidence thing. But I mean, shoot, it gave some nice engulfings off of this level, this retest level, nonstop, back to back to back. This was beautiful. I think this was valid for an entry. It's aggressive and it's risky, but I mean, look at this. Look at your risk reward for this. Let's say you use this as your risk reward, and then boom, this was a 23.6, and you use your FIP target for the TP. You know what I mean? Like this is 300 something pips. So it's not always that we're gonna get this, although this is our main bread and butter. But I'm just saying sometimes we do get entries like this or opportunities like this where the market doesn't really give us clean, huge like shifts that happen and a lot of structure to analyze. But we get opportunities to enter off of like retests of support areas like this. It's aggressive, but I'm just showing y'all that's something else just to throw out there that could potentially bend something. But other than that, I just continue to keep flowing. All this stuff was 23.6, and then the market kind of just went on this crazy little run, right? So when the market gets this, like this, I don't like to trade this type of movement, like all of this, because technically this is just a continuation from here. So I would just look at this and I would say, all right, the market is just flowing up, and it's not really pulling back, but we still can dig into this. Look at this. I'm gonna show y'all. Look at this structure here. We still can entertain this and find beauty within all of this small movement. Here. This is being a bit extra, but you still can find, you feel what I'm saying? Like you still can find Confluence in here. It's still retesting and pulling back is just very minimal. It's very, very minimal retracements that's happening, but the market is still trending. It's still flowing. So if, let's say, for example, if you would have took a buy here, or if you didn't take a buy here and you said, I'm looking at this, I'm analyzing this, I'm seeing the continuation that's happening. Let me get this off the screen. The continuation that's happening on gold currently, and you want to try to scale in, you already know these are scale in type of opportunities. So when we look at scale-ins, we just looking at this structure. We try to base this off of 1 hour or 30-minute structure. Usually 1 hour is best. You can see this was a high. We had a very, very minimal, little higher low point. This will obviously be clear on a 30-minute and 15. And as we go down, what do? Retest, structure. Boom. This is a scale-in area. Dig into these candles. usually for scale-ins, I like to enter off of the 30-minute. Sometimes I take 15-minute entries on scale-ins, like these type of things. These type of things are scale-in opportunities. But I like 30-minute just because it's stronger data. So this would have been a beautiful entry right here. This would have been the first entry. Bullish and bullish variation. Beautiful. Very perfect. Stop loss below it. 92 pips, and continue to ride out. And you could have capitalized off of this and tried to, continue to ride out with this wave. Like obviously this risk reward doesn't look the greatest, but I'm just showing you all examples of how to scale into orders sometimes when the market is just free flowing and it's just flying. Because this is really just the market just trending up, just trending, like strong trend, barely pulling back. Because this happens a lot. Sometimes this will happen, and then you just kind of get in scout mode. You get in here, you might want to move your stop loss a little up higher and just scale in and take you a 1 to 2. You know what I mean? Try to look left to right. Obviously, left to right, it's not really much zones that's relevant. So you just would have had to just use your confidence and try to scale in and just try to find a 1 to 2 risk reward to take it. It's just a scalping opportunity, but the structure and the system is still applies, because you still see structure clean, and you still see the same stuff that we do is happening. It's just very minimal. You would have try to find a scalp opportunity there. You could have looked at this and seen, all right, level of support. I mean, we could have looked at this and seen, okay, we got like a little retest here. Try to get in on there on 30 or 15. Boom. Look at that. Beautiful candle. Crazy candle. This is a crazy entry confirmation. Like, that's insane. You know what I mean? That's a buy. 15 minute. Oh, shoot. 15 minute. Even better. Even lower. You got your entry confirmation right there. You feel me? So this is just showing you, like, it's so many ways to apply this stuff to get in here and take advantage of opportunities. You just gotta have the basics down. Once you got the basics down, you can literally go through the market and just kill and and chop the markets up, and finding opportunities like this. And this is just you just going through using the basics and scalping your way through this. This would have been 160 pips here, 140 pips there, and then if you let's say you didn't get an entry here, but even if you did, that would have been 200-300 pips. So just multiple opportunities and ways to scale in on a setup. How does that look? Tell me what y'all think about that. Was that clear, or was that kind of
It was clear, man.
Okay.
Super clean.
All right, cool. So that's literally how I attack back test opportunities. I would have did the same thing. I would have saw this and I would say, all right, now I just back test a whole bullish push. That only took me 15 minutes. I would have did the same thing, bro. I sit here and do this shit for hours, bro. Like literally, y'all, I'm telling you, like when you put the time in on the charts, bro, and you put you dedicate a couple hours every time, or at least an hour. I really wouldn't even say this. Don't even look at the time. Just back test and just get on the market and just whenever you get time, you done with whatever you're doing for the day, you get home, just get on the chart and just put some hours in, bro. Just put time in and just put reps in and just go through the market. I would have did the same thing here. I would have looked at this and said, all right, cool. We had a nice bullish push here. Let's see what happened. What created this? I would have looked at this 4-hour time frame. Biggest thing I noticed up front, we got a nice zone right here, level of resistance, and then the market is kind of ranging. We got a huge zone here. All right, cool. Look at this. What happened within here for all of this to happen? Replay tool, boom, boom, boom. Get down to the 1-hour time frame. See what happened, what took place in order for all this stuff to happen. We already know we don't trade range and move markets. So if this was today, we would have just been waiting like this. We would have just said, what can we see that's obvious? All we can see is higher low points, and then boom, eventually the market broke all of this and made a new high. Same thing, market off. This shit gets so repetitive, but it gets simple. Like once you get this stuff, bro, it's so easy to see this shit. It's boom, new high. Now we waiting for a higher low point. Pull your fib out. This is the most recent higher low. Same thing. Literally the same shit. And this is why I tell people to trade gold. I used to never trade gold until like last year? Yeah, year 3. well, this is year 4 now. So this year I just started trading gold. Was it? Yeah, this year. So in January I started trading gold. Well, December going into January. One of my homies was, encouraging me to do it. And bro, this pair, it gives crazy setups, bro. Crazy setups. Look at this. Same thing, 38.2. But you see the market pushing up, so you're just patient. We don't know what's going on. We retrace. We can't just enter off a retracement. We gotta let structure show itself. Pushed all the way up, made a lower high point, came back down, higher low. What do? Mark this stuff off. Got level of resistance. Boom. Price broke it. And we already know, as we get right here, all we gotta do is get down to the lower time frames, 30 and 15. Look at this stuff. Get to the 15-minute time frame. What do you see? A clean break. I caught this setup. So boom, clean break, boom, retest. Get down here, mark it off. Higher low point, and now you got your entry confirmation. Boom, boom, boom. All right, so it's easy. It's simple math. Just following the strategy and going and following through structure. But you can see, we got entry confirmations, and this would have been a nice buy. We definitely caught. Did I catch this? I think this is the buy. The last one of the last trades I took or sent to the chat, but yeah. So this would have been an entry here. Obviously, buy, boom, stop loss below it, and then TP at the fib target. So literally going through the market like that, bro, and just finding the next setup and flowing with the trend. You see that was a 38.2, move it up, and we continue to do the same thing. Boom, this would have been a new higher low, and boom, boom, boom. So it's just flowing and just applying the strategy to the markets, and just going from there, applying the same stuff. And then after a while, you'll zoom out and you look at your charts, and all this stuff is gonna be marked up. That's how it should look. When you finish a session of back testing, you should see at least, you go to the 4 hour, all this shit should be marked up. You should see setups. Because it's a majority of the time, it's an opportunity to take advantage of. So you got to figure out a way how you could analyze this, and your mindset should be, how can I attack, or how would I have attacked this markets, right? What would I've done in order to take advantage of these setups? And you just do that, and you do the same thing. Sometimes I'll just go over here and look at it and say, all right, this is a beautiful push. I'm finna break down all of this stuff, and that's it. So does that make sense, Lidio? That answer your question? Because I know that was the main thing you was asking, like, what do I do and how do I decide what I'm gonna back test?
Perfect example.
All right, cool. All right, so I'm not gonna hold y'all all night. So let's go over this gold one. And again, yesterday I wasn't as I don't know. I just wasn't seeing this as clear. But also, just because we're looking at other pairs, I didn't really get a chance to really fully lock in, clear my charts. So sometimes I don't see something clear, or if I just don't feel right about something that I looked at, I just erase the chart. I literally go over here, click the trash, remove all drawings, and I just erase everything. All right. And then I come to the chart with a clear, naked chart. And I'm just looking at this from the top. We're going to go all the way, weekly, and just going on down. Obviously, we know the market is hella bullish, but we having back-to-back bearish weeks, right? So it's a lot of bearish selling pressure in here. Excuse me. Get down to the daily. Let me do this again. Get down to the daily. And we're just doing a quick top-down analysis. The biggest thing that we can notice, nice zone right here, right? Nice level of resistance on the daily. So this is very strong. It shows us that we have a lot of rejections up in here. So this is relevant. And then also on the daily, this is a huge lower high point area. So that's big. So we know that the market is within a shift. This is technically more so bearish than bullish right now, right? We're not worried about all of this over here. We're looking about current, half the screen. We always break the screen in half. What's going on right now? This is bearish. It's a little ugly, but it's bearish for the most part. What else can we see? We can see we had a nice little daily zone here, a nice daily support, right? And that's basically, the main things. Also, the moving average, the daily moving average. Price is below the daily moving average. When it gets below the daily, that lets you know, like, this is a lot of selling pressure. This is a big deal. So the moving average is very important. It's not like the moving average. We don't depend on the moving average to trade, but it does help when we see the price below it, and knowing that the price is below the moving average and it's sloping down like that, like horizontally, that lets you know it's a strong trend that's going on. So the momentum majority is bearish. We go down to the 8-hour. I like the 8-hour and just trickle on down halfway. Same thing, right? See how the moving average is sloping down? Like that whole positioning is almost horizontal. There's nothing but bearish momentum going on. And it's obvious. Like on the screen right now, we see nothing but bearish. We don't see much bullish. It only stops here and it's nothing but red. So the market is bleeding. So we got to be on the bearish side of things. So from there, you want to mark off your structure points. If you see anything, cool. We can see obviously that on the 4-hour, this would be a bit more clear. But for the most part, we can see bearish movement. Also, price has broken this little level of support, which is okay. Like I said, I don't like to just take zones and bring it all the way across, but I would have just left this here and just looked at it. Obviously, we broke below this, this level. But for the most part, the market is bearish. Everything we said from the higher time frame is showing on the 4-hour, so we're all correlating. So that means when you got all the time frames in the same direction, that's strong. You want to go with that trend. So we bearish. Look at this. Boom, boom, boom. We see nothing but lower high points. All structure just showing here. Right? And then from here, it's a 4-hour time frame. So when the market is moving like this and we have these very minimal retracements, we already know that these are small. You can look at this and tell this is 23.6 type of retracements, right? Or barely, if that. It's not anything crazy. So technically we never really made an official lower high point, and that was what was going on here. So you could take your fib and it's all just, like moving and adjusting as it fits. I just pull my fib out and look just to make sure, right? And I pull it out and let's say here, let's go here. What can we see? This pretty much still looks like a huge 23.6 type of movement that's going on. The biggest things that we can see, we dig into this counter trend that was going on. What we see, higher low points, higher low, and pretty much like a higher low point here. Technically, well, let's just say, because this wasn't there yet, so we're gonna go like we were looking at it from yesterday. All right, so we're gonna pretend none of this happened yet. So for the most part, we can see kind of like higher low point here, or just some type of support being built, just because it's a bearish and bullish candle. And we can always try this out and look at it on a 1-hour just to see how it looks. All right, so I got my drawing set on the 4-hour time frame, just where my fib only shows on the 4. I'll move it and put it to the so it shows on the 1-hour as well, just so it don't confuse y'all. But for me, I like to just kind of take that off, just because it just creates like just cleanness for me. So obviously, if I go to the 1-hour and just look at those those structure points that I was showing y'all on the 1-hour, it shows here still the same. I'm gonna redraw them just so it's a bit more smaller and cleaner. All right, so all I'm doing is just drawing structure, the basics. So we go back to the 4-hour now. So this setup, this is a 4-hour setup, just because this where we started at is where it's the most clean. We can see clarity, there's not too much going on. And we also got through our fib on here, and then we can kind of see this. We got the 4-hour moving average sloping down like that as well. Look at this, the positioning, right? So that's all strong. So now let's dig into this. So the biggest thing that, like we talked about yesterday, it was a zone here. It was a level that the market is pretty much rejecting, where it's a lot of rejections, a lot of exhaustion. You can even drag this across a little bit, and you can see we got some confluence going on in this area, right? Very obvious. All right, and it's all happening up in here. So the market gets here and it slows down. Cool. Now looking at this is where I was missing, which I didn't really dig into yesterday. When we see this was a higher low point, right? On the 1-hour, you can see it, and this is like it's a structure area, higher low. So what it did was literally go here and just break it and retest it. Look left to right. Can see that? Just break and retest. So it really gave a clean ass opportunity. This was a clean opportunity to check us out. Also, remember, this is a 4-hour fib. So obviously, if you got a 4-hour fib, that means that this is a big setup. Like, it's a 4-hour setup. So the market isn't just gonna just fall immediately in one day or 10 hours to go here to the target. Sometimes it does, but majority of the time it's gonna take some time, right? So being that it may take some time, this is where you look at this and you can keep everything that we just analyzed from the 4-hour. You keep all that in mind, and then you get to the 1-hour and you try to see what you can do. And this is where it comes with just understanding how to flow within time frames where you can take advantage of stuff like this. So I could have seen all of this stuff, right? I know this is a lot, but just follow me. And we're going to have this recorded just in case y'all got to go back. But this is going to be a lot of game for y'all. So all this stuff that we just analyzed, right? We can do this. I'm going to take this now, and this is the reason why I put this on the 4-hour, just in case, so y'all understand now. I leave the fib that I have on the 4-hour, just showing up present on the 4-hour, and when I go to the 1, I take it off. Because a lot of times, you may get a 1-hour setup, so that way you can still take advantage of it and close out some profits, and you don't have to wait for that far-ass target that's on the 4-hour fib. Does that make sense so far? You understand what I'm saying?
Hell yeah.
Okay. So now, what I would do, try to find an area or just try to find an opportunity and see if it's something I can use my fib for on a 1-hour. So now that I'm on a 1-hour, you can clearly see we got lower high points, lower high, right? It was a break and a retest. You already know once we get a break, yellow circle or whatever circle you want to use, pull back, break, and retest. So
Yo,
obviously,
Mauri, yo, I got one question, bro, real quick.
Uh-huh.
Do you still use sub fibs?
Did I still use what?
Sub fibs.
Oh, sub fibs.
Yeah. Because I saw a lot of your breakdowns and your the breakdowns that you'll be sending to the group chat.
Yeah.
And I mean, you're not using them pretty often, right?
Yeah. So that's a part of the journey, bro. Like
Yeah.
as you evolve, bro, like certain things, like it's I've used it a lot, right? Like you see the videos on the course. It's a lot of stuff that I was using a lot year 2 and year 3 that today I might not use that much. It's still relevant. It's still stuff that can be useful. But to be honest with you, I haven't threw a sub fib on in a long time, to be real. I haven't.
Right.
But just as needed, But this for example would be pretty much considered a sub fib. Cause look at this. What I'm showing now is pretty much like a sub fib. All it is just we're gonna throw a 1-hour fib on this. So if you look at this now, right? If you look at this and you say, all right, cool. You're gonna go here and just try to draw up our retracements, and see what we got. Obviously, this was pretty much like a. This is pretty much a valid lower high point. I would say here. I would take my fib from here, point A to point B, and I would say, all right, cool, boom, 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 right? And look at what we got. Point A to point B on the fib. We got pretty much a 61.8 retracement. Both candles didn't really reject here, so we're gonna say 61.8 is pretty much a rejection from this break and retest. So really the fib that I have here, this fib is not really for this retracement, it's more so for a target, right? Because remember, this whole setup that we analyzing is a 4-hour setup. So being that it's a 4-hour setup, I'm already understanding what we have. Like if I erase this, follow me, y'all. If I erase that fib, this is what I was saying earlier. We don't always need a fib because really everything that I'm analyzing is based off of this structure. You feel me? Because remember the 4-hour time frame, we had all this stuff we built up. We got a 4-hour target. We already know our 4-hour swing target is down here. We just want to take advantage of this opportunity in here just so we can close out some profit, right? So we understand the 4-hour is going to take a long time for the market to get down here. So while it's doing all of that, we're going to take advantage of this, the intermediate stuff. So the biggest thing we already got is a level of structure. We got a break and a retest. So technically, I don't need a fib here to find an entry. All I got to do now is understand what I have. And I go to the 1-hour and it's even cleaner. And we got this moving average right here. Look at the moving average, y'all. You see the moving average? You see how it's horizontal. Horizontal. Whenever you see the market giving you a moving average like this positioning, and it's at your area of interest where you got a retest, it's golden. So now we see all of this, bro. The market is literally, the moving average is literally like choking the hell out of the candles in this area. And we see this strong rejection at this level. So it never broke it. It just tested, right? Tested. All tested candles, right? So seeing this strong rejection and the moving average paired to that together and pairing it along with a retest, that's all your forms of confluence. You get down to that 30-minute. Look at this. Look how this shit is all aligned. You see what I mean? You got the moving average doing the same thing they're doing on 1 hour on the 30-minute. And we're rejecting the moving average and what we have right here. Bearish variation. So this was beautiful. Like, I'm actually looking at this and I'm like, damn, bro, like this was actually a awesome opportunity to take a trade. I'm on my break. I'm taking, I'm going to chill and just be disciplined and stick to my guns right now. But I mean, this was nice. I I wish I would have entertained it, but at the end of the day, we're going over it now and we can learn from this. But you see how all this stuff is aligned. The 1 hour, the 30-minute, all this stuff is right here. So this was your entry. Boom. Stop loss above it, right? It's above the 30-minute moving average. It's above, this level, this retest where you had that strong rejection. You got to have confidence. The entry right there. It's above the 1 hour moving average, all that stuff. That's what? 69 pips, 70 pips basically. And then your TP is where? On your 1 hour fib. Oh, I took away my 1 hour fib. Let me put it back. Boom. So this would be pretty much like a sub fib to answer your question, Gabriel. All right. Boom. Stop loss there. TP would be here. Negative 27%. Bingo. 170 pips. That's a 1 or 2 risk reward. That's awesome. And then look at this. So now, follow me. I'm gonna take this fib off just so it's easy to see. We can see through this stuff. So boom, this was your first entry, right? Where that blue highlight was at. So obviously, the market didn't get all the way to the fib target. It got here, right? So it got up to like 136 pips. This was at 4, 5, 6 in the morning. Some people might have seen this and seen rejections and all this and said, all right, let me close my trade. Some people would have just held it because they fell asleep, whatever. Now, let's just say you in this trade. Excuse me. You had an entry here. And then also, let me move this off as well. Look at this. If we look closely, we got a level like right here of structure that the market was kind of, rejecting that. And then look at this. Retest. Just retesting structure. Now you get down to lower time frame, boom. See that shit? Like, you see how aligned this stuff is? Like, you can't make this up. Like, look at the moving average. Boom, boom, boom. Obviously, this candle is crazy. You probably wouldn't have been able to enter on this because it would have just kept falling. It's too far. But I mean, damn, even a 15-minute, bro. Like, look at this. So all this stuff, bro, this is perfect. It's perfect, like, textbook structure to kind of use this to study off of and, to put online for people to see this, because I mean, it's just showing the beauty of this strategy that we use, bro. So it's another opportunity here. Obviously that's far as hell, but it still applies. So boom, that was another scaling opportunity there. And the market just continued to flow, and then you could just mark this up, boom, lower high point, and then now hopefully another lower high point to continue on down to the fib target, which would be, a little down here, and that was here, point A to point B. Boom. So the market ended up playing out and passing this TP and hitting TP2. So that was the setup, bro. Does that make sense? What y'all think about that?
And if we want to hold that trade, for example, with H4 target, can we do it?
Yeah. You can always do it, but would you really want to hold this trade that goddamn far? Hey, look, this is, pretend you got in here, bro. And let's pretend you got in right here, right? What we talked about. Let's pretend you took this sell and you entered there and you seen the market go all the way down here, 126 pips, and go all the way back up to your entry and then back down to your TP. and it went to TP2. And let's say you closed out majority of your profit and you left a runner, and the runner went here to TP2. At this point, bro, enough is enough. Take your trade. Take your money. Trust me. Take your money. You take your money and come back. Or if you wanted to leave some runners, okay, cool. If you want to leave a runner, by all means, do what you want to do. You know what I mean? But that means that majority of that profit that you took from all the way here, bro, you got to close that out. You got to secure the bag. You follow me?
Yeah.
So definitely, if you really wanted to swing it, you could. But that you turn into a swing trader. I mean, look how far you got to go. You feel me? You got to go. You got to go from all the way here all the way down, bro. Look how many pips this is. Not saying that it's not nice, or it's not a lot of pips, but I mean, goddamn, bro. That's 700 pips. You know what I mean? Like, who the hell holding a trade that long? So, but yeah, if you wanted to hold it that far, you can, because this is the 4-hour projected target. But just understand, it doesn't have to go here. It's not a guarantee. Nothing is guaranteed. So, being that all this stuff is we trading, and we have to be understanding that we have to be comfortable with the uncertainty of the market. So, knowing that, bro, once it hit all TPs, I'm out of the trade, bro. I'm cool. If I held this trade down here, that mean I took so much profit out of this that this right here, it can go all the way here, and it's just gonna knock me out at break even. And I barely would lose any money, cause you know what I mean. Like I'm not gonna hold a trade that damn long for no reason, unless it's just some small runner that just can make me a lot of money down here. But I'm not after going all through this and perfect movement and going back into break even and going back down. I feel like you just close the trade. But it's up to you, obviously. You just have to understand where you're at and know that this is gonna take a long ass time to get to your 4-hour target. And as long as you're okay with that, then yeah, hold your trade. Hold some runners. So that's how I would go about that. But yeah, bro, overall it was a nice setup. It was a lot of Confluence, and a lot of stuff you had to dig deep to these levels to be able to see this. But this just comes with practice and obviously more chart time. All this stuff becomes a bit more clear. And shit, I mean, this is great opportunities. But yeah, that's the setup, man. What y'all thinking, man? Y'all got some questions or anything?
For me, no. It was super clean.
Cool. Yeah, I mean, I don't have much else today, man. I just wanted to just go over that, possibly answer some questions. I'm definitely gonna upload this. This is golden right here, bro. It's a lot of golden nuggets in here. People that come out there is gonna definitely appreciate this one. People that watch this.
You gonna send that to the chat?
Hell yeah. You seen what I did? You seen what I put in the chat though about these breakdowns?